Here's what Wall Street doesn't want you to know. While everyone's celebrating another day of record highs, the real test is just hours away, and it could shatter the market's current euphoria. Market futures remained virtually unchanged during Wednesday evening trading sessions, as investors held their breath before Thursday's critical inflation report that could either validate or destroy recent bullish sentiment. The broad market index futures stayed near equilibrium levels, with technology-heavy index futures managing only a modest 0.1% uptick. Industrial average futures crept higher by a mere 35 points, representing an insignificant 0.08% movement. But here's where it gets controversial. Wednesday's trading session marked the second consecutive day that the benchmark index closed at unprecedented peaks, driven primarily by a single company's explosive performance. Oracle Corporation experienced an absolutely staggering surge of approximately 36%, delivering its most impressive single-day performance since 1992, and instantly adding a mind-boggling $244 billion to its market valuation. What's really happening here? Investors went wild over Oracle's optimistic projections for its cloud computing division. But this raises a critical question. Are we witnessing genuine business fundamentals or dangerous market speculation? The excitement didn't stop there. Market participants interpreted Oracle's surge as validation for the broader artificial intelligence investment theme, triggering rallies across related technology companies, including Broadcom, AMD, and Micron. These gains provided the only bright spots during what was otherwise a lackluster trading day that saw the industrial average tumble more than 200 points, while the technology composite barely maintained positive territory. And this is the part most people miss. All these celebrations are happening while everyone nervously awaits Thursday's August Consumer Price Index release, scheduled for 8:30 a.m. Eastern Time. Economic forecasters surveyed by Dow Jones anticipate a 0.3% monthly increase, translating to an annual inflation rate of 2.9%. The core measurement, which excludes unpredictable food and energy costs, is projected to climb 0.3% from July and 3.1% compared to the previous year. The plot thickens when you consider that Tuesday's Producer Price Index delivered an unexpected surprise by declining 0.1% monthly, though it still registered a 2.6% annual increase. This unexpected drop has market strategists buzzing with optimism, perhaps too much optimism. The producer price signal is impossible to overlook, declared Julian Lafargue, who serves as chief market strategist at Barclays Private Bank. Barring any significant upward surprise in consumer prices, investors will likely maintain their optimistic Federal Reserve outlook. But here's the million-dollar question that nobody's asking. What if everyone's wrong about inflation? What if the market's dovish expectations are setting us up for a massive disappointment? Traders aren't just watching inflation data. They're also monitoring Thursday's unemployment claims and federal budget statistics. Corporate earnings continue rolling in, with Kroger reporting before market opening and Adobe following after closing bell. Meanwhile, after-hours trading revealed some fascinating developments that hint at underlying market tensions. Oxford Industries shares rocketed 14.7% higher after the parent company of Tommy Bahama and Lilly Pulitzer exceeded earnings expectations from FactSet analysts. The company also provided reassuring news about reduced tariff impact expectations for the current fiscal year. However, and here's the catch that most headlines won't mention, Oxford simultaneously reported disappointing quarterly revenue figures and provided underwhelming earnings guidance for the upcoming quarter. This mixed bag perfectly illustrates the market's current schizophrenic behavior. Alibaba's U.S. listed shares dropped 2% following the Chinese technology giant's announcement of a proposed $3.2 billion offering in zero-coupon convertible senior notes maturing in 2032. This move raises questions about the company's capital needs and future growth strategies. As futures remained essentially flat shortly after 6 p.m. Eastern Time Wednesday evening, one has to wonder, are investors displaying appropriate caution, or are they simply in denial about potential risks lurking beneath the surface? The real controversy here isn't just about tomorrow's inflation numbers. It's about whether this market euphoria is built on solid foundations or dangerous assumptions. With Oracle's massive rally potentially signaling either the dawn of a new AI-driven economic era or the formation of a speculative bubble, investors find themselves at a critical crossroads. So here's my challenge to you. Do you believe Oracle's 36% surge represents genuine value creation? Or are we witnessing the kind of irrational exuberance that historically precedes major market corrections? And more importantly, if tomorrow's inflation data comes in significantly higher than expected, will this house of cards come tumbling down? Share your thoughts. Are you betting on continued market euphoria or preparing for a reality check?